Well, good Monday morning. Welcome to Market Day Report. I'm Scott Shelty, otherwise known as the Cow Guy. Just hop off the radio. Now we're going to be jumping into the commodity action here. And it was a little bit pricey overnight. So why don't we jump right in and look at what the corn market did for us. The corn board brought to us by Bar Charts. We're up about 7.25 cents in the September at 563.25. That's about 8 cents off the high. So we were kind of toppy overnight. Dees, the new crop, 559.25. Up 7.25 itself. So soybeans, do we have the same? Not quite as much. September soybeans, $14.12.25, up 6.25. Looking at that November, Novi trying to get a 14 printout. It did overnight at 14.18 as the high. We've backed all the way off about 21 cents to 13.97.75, only up 6 on the day. So we were up double digits, well into double digits earlier on this evening or late or early this morning. But we've kind of given it all back, or at least a large percentage of it. Wheat, Chicago wheat, double-digit gains there. December up 10.5 cents at 7.10.25, while the September just below 10 cents at 9.5 cents better on the day at 7.02 even. We'll take a quick look at hard red wheat. Hard red wheat also higher. December up 10.25 cents, 6.72.25, and the September coming in around the same, up 10.5 at 6.62. Finally, Minnesota, the spring wheat, Minneapolis. Here we go, 15.75 cents higher, 9.21.25 in the Dees, 9.21.25. And then we've got September up 17.5 at 9.34.75. Well, we've been lucky enough to have Brian Hoops join us today. Brian, some fireworks overnight, not just in commodities, by the way. Brian's with Midwest Market Solutions. What are you going to be talking to with most of your customers here this morning as we go into the open?
Yeah, good morning, Scott. We were talking about this weather, of course. That's a hot and dry scenario, especially into parts of Iowa and the Dakotas, Minnesota. We have crop ratings likely to improve this afternoon for corn and soybeans and deteriorate a little bit in spring wheat belt. Traders talking about that. We're talking about why these grain markets are not finding the strength to gap and move higher like they had previously. It seems like in the Sunday night markets, we used to open stronger and then would build onto it. And now we open stronger, and that rally kind of fizzles out. As you mentioned, we are up near the highs of the night on the opening and backed all the way off to near our session lows by the morning hours. And we just have a lack of fund activity, it seems like, from the long side. They have been steadily liquidating positions instead of steadily building positions as we've gone into the summer months. Of course, you have the outside markets, some equity markets like the dollar rallying to new highs, stock market, equity markets dropping, energy markets dropping sharply. All these are a little bit negative for our grain markets as well.
Yeah, we were excited early on, and as I checked things going to bed last night, and you're right, we have kind of faded. And I think sometimes you have to kind of get into the mind of the market, and not that I'm trying to get too over my skis here, but the market probably built in a lot of that insurance premium going home. What if the weather report doesn't change? And it really didn't, right? And so we kind of already had that in. We open up a lot higher, and you think to yourself, what's going to power this market from here? And maybe not much. And I think you saw some folks unload in the hopes that they were going to get a better chance to buy it again. And I think that's come true.
Yeah, I totally agree with you. On Friday, we did put some premium in the markets. And the weather forecast really did not change. It's still a concerning forecast, same as what it was at midday on Friday.
Right.
And so we opened stronger and just did not have anywhere to go, just kind of ran out of buying ammunition. And traders are looking at this crop progress conditions this afternoon, likely to see a small increase. They're thinking if that happens, we'll get a chance to rebuy in the Monday night session, early Tuesday morning session.
Hard to argue with that. Okay, Brian, stay right there. We're going to go away, pay some bills, and we'll come back and talk livestock in a moment. Well, thanks for coming back to Market Day Report. I'm Scott Shelty, and this is a good Monday morning kind of opening call here. We don't have the livestock open yet. They open up in a minute here, but we can go and show you how we went home on Friday afternoon. Friday afternoon saw live cattle a little easier on the day, or not about 95 cents in August, 92 cents in October at 125.60. Now, it'll be interesting to see how these open up with other inputs, shooting higher as they did. Now, we've seen those input prices come back off, but again, we saw feeder cattle also easier going home on Friday, $1.75 lower in the August at 155.62. And then lastly, the stalwart of the group, the one that's eking out the gains, even though we've got some input prices higher. It'll be interesting to see how these lean hogs open up. We had a $1.35 rally and a $1.30 in both August and October. On Friday, we'll see where we come in there. We also have Brian Hoop still with us from Midwest Market Solutions. Brian, you mentioned the outside markets, and over the break, I couldn't help myself, and I looked over, and we've got the stock market off roughly around 500 points. The Delta variant sneaking back into the headlines. The headlines are going to be this today. Everybody's going to have to deal with it. Weather and the stock market. And the stock market's really going to be all because of the Delta variant. And maybe are we going to be growing as fast? What's that going to do to demand? And you know what? What would that do to our demand over on our side of the ledger? Because you know what? I don't have a lot of friends in the camp that I'm in. I don't have a lot of friends anyway, but I think that the market got way ahead of itself on this reopening trade because it just felt like to me we were trading like we invented some sort of new technology in 2020, and I didn't know what it was. So I don't know what your thoughts are on the demand side of things, but seeing what we've got this morning, what would you say to your customers, early on here?
It looks like we're going to probably open the feeder cattle weaker due to the higher corn prices. I call live cattle just as kind of a steady, choppy type opening. The calls for the cash market that we're hearing this week in the cattle are mixed. Southern trade could be steady to lower and likely to be lower, especially the problem state it seems to be Texas, where we have abundant supplies of cattle to work through down there. But as we go farther north, those supplies tighten up quite a bit. We could see dress trade actually higher this week, as we still have very tight numbers in Nebraska, and these cattle on a dress basis are in pretty strong demand. So I do look for some mixed trade in the futures, mixed trade in the cash this week. In the hog market, as you mentioned, been pretty much on fire. The cutout values moving higher, and that is supporting stronger cash markets. We're discount to the index in the August contract, and all that is a supportive feature. I think the hogs probably open a little bit firmer here and trying to rally this morning.
I really appreciate that. I bloviated away and ruined all of our time here, Brian. So next time I'm going to hand it back over to you a lot earlier. But thank you very much for being on with us today. That's Brian Hoops with Midwest Market Solutions. Now I get to hand it back over to Janet. Haven't said that in a few weeks.